Okay, so I'm just going to recap what happened to gold prices today. Um, right off the bat, we had the news come in. US stocks, they got a boost from tech after better than expected GDP report. So obviously that signaled to traders that the economy is improving, or there is nothing to be concerned about, and stocks are doing well, the economy is doing well. And so as a result of that, obviously the price of gold started to fall, the demand for it started to fall. um, and of course, stocks, as I mentioned in previous videos, they have a negative relationship with gold. Afterwards, there was some news about natural gas storage. So as we can see that the actual gas storage was worse than forecasted, which is indicating that more gas is used up. The gas prices, obviously, because of that shortage, they're really high. The prices of the price of gas is really high, which is really bad for households, of course, because they have to spend more on utilities and anything else, which is obviously bad for consumption as well, because households have to well, it's affecting their savings, their budgeting, so there is less consumption in the economy, and that is bad for the economy. And since this is a bad sign for the economy, the gold price actually started to go up. So right after these news, the gold price started to go up, because a bad sign for the economy is a good sign for gold. There is a inverse relationship. It is a safe haven asset, so it's natural that this happened. Afterwards, there was the KS Fed Manufacturing Index, or KC Fed Manufacturing Index. So this is a survey of manufacturers, which provide information on current manufacturing activity in the 10th district. The survey monitors about 300 manufacturing plants, selected according to geographic distribution, industry mix, and size. The survey results reveal changes in several indicators of manufacturing activity, including production and shipments, and identity changes in prices of raw materials and finished products. A higher than expected number is a positive sign for the dollar, while a lower than expected number is a negative. We can see that there is not much improvement in the manufacturing index. It only improved by -2. So really, this is still a bad sign, a negative sign for the dollar. And as a result of that, since dollar is weakening, or as this index is indicating, then the price of gold naturally goes up, because obviously there is a negative relationship between the dollar and gold. Afterwards, there is the 8-week bill auction, which improved very marginally. I don't think this had much of an effect in the market at all, so we can skip that. Then we had the 7-year note auction, which actually worsened from the previous period. So US treasury notes, they have maturities of 2 to 10 years usually. Well, in this case it's 7 years. And basically governments issue treasuries to borrow money to cover the gap between the amount they receive in taxes and the amount they spend to refinance existing debt and to raise capital, perhaps. Now, the rate on the treasury note represents the return an investor will receive by holding the note for its entire duration. All bidders receive the same rate at the highest accepted bid. Now, since the yield on the bill decreased, and I talked about this in a previous video, when a yield of a bond is low, then that translates into higher prices, and we can see exactly that relationship playing out here as well. This news comes out and immediately gold continues this jump. It increases from this point from $1,926 to $1,932. Okay. So the next thing is the reserve balances with Federal Reserve banks. I'm not sure how this relates to the gold market exactly, so I'm just not sure how this affects the market. So I'm gonna have to skip that one. Then we had the Dallas Fed PCE, which is like a CPI, really Consumer Price Index. It's just in the US they use a different abbreviation. So for them is personal consumption expenditures. That's how they look at it. But anyways, what this Dallas Fed is, it's a weighted average or mean of the rates of change in the prices of all the goods and services that make up the index. Calculating the trimmed mean PCE inflation rate for a given month involves looking at the price changes for each of the individual components of personal consumption expenditures. The individual price changes are sorted in ascending order from fell the most to rose the most, and a certain fraction of the most extreme observations at both ends of the spectrum are like skaters. Best and worst marks thrown out or trimmed. The inflation rate is then calculated as a weighted average of the remaining components. But anyways, the resulting inflation measure has been shown to outperform the more conventional excluding food and energy measure as a gauge of core inflation. Basically, put simply, inflation is cooling off according to this indicator. Previously it was 3%, now it's 2.3%. So inflation is cooling off, and since inflation is cooling off, there's less need for gold, there's less need for a hedge against inflation, and that's the rationale. And obviously the price of gold immediately dips right after these news. And then because traders, some traders obviously are going to take advantage of this discounted price of gold, and they're gonna start buying more gold in these at these prices. So the gold prices goes up as the amount goes up. Then we arrive at these news, which is the core PCE price index. Again, they forecasted it to be 0.3 and it actually ended up being 0.3. So again, kind of good news. Inflation is staying static or is being managed well according to this indicator, and because of that, that's a supportive, that's a bullish sign for the dollar, and obviously that's a bad sign for gold because of that negative relationship between them, and the gold price immediately starts to dip right after this news, as we can see here. Afterwards, we get the news about pending home sales. As we can see, the actual figure was so much better than the forecasted figure, 2.5 from 0.9. I mean, that's a massive improvement that is indicating, well, before talking about what it's indicating, we need to talk about what it is. So the National Association of Realtors, NAR, pending home sales report measures the change in the number of homes under contract to be sold but still awaiting the closing transaction. The report excludes new construction. A reading that is stronger than forecast is generally supportive or bullish for the dollar, while a weaker than forecast reading is generally bearish or negative for the dollar. And we can see here, based on the actual numbers, that's very bullish for the dollar. It's showing that there is quite some activity going on in the real estate market. And again, right after this news, gold falls, then comes back again after investors start to increase buying at these discounted prices. Then we come to US Baker Hughes total recount. Again, this is actually irrelevant for the gold market, really. This is more related to oil and gas, which are somewhat indirectly related to gold via the economy. So we're gonna skip that because it's quite irrelevant. Then the last piece of news that was released was CFTC, Nasdaq 100 speculative net positions. So what? Well, it is what it says, right? So we're looking at the net positions of speculators in the market. Previously, they were shorting the market. There was 20.6k yeah, so there was 20.6k short positions net, and right now the actual net positions of speculators have increased. So that is indicating that in the Nasdaq, speculators are going to drive the price lower, And if obviously Nasdaq, which also has a negative relationship with gold, um, that that is going to increase gold prices. And obviously, if the Nasdaq is falling, then gold price is going to increase, and this is actually what started to happen. Couple of like, let's say an hour, couple of hours before the market closed, the gold price was starting to pick up right after this news.